Hey everyone, Couch Investor back to another video for today. So let's talk about UiPath. Pretty popular stock in ARK Invest portfolio. It's actually the number 4 stock overall in all of ARK's ETFs. Number 3 is now Tesla because of that huge drop in recent weeks. Number 2 is Zoom. Number 1 is Exact Sciences. Now, with regards to their last time they bought, that was October 10th, so they haven't bought in a while. Now, since then, we obviously had a new earnings report, so we're going to talk about that in this video. We have new price targets as well. And now the overall price target, the average, means that, well, analysts see a 60% upside in the next 6 to 12 months for the company, which, to be honest, not that bad. Now let's start with the two price targets. One was lowered, the other one was raised, but both of them are pretty positive. So Truist lowered from $25 to $20. Right now the stock is at $13, so still a quite upside here, which is why they keep a buy rating on the shares. He says that the price target cut is due to modestly lower revenue owing to currency headwinds and difficult macro conditions. Now with regards to currency, we're going to talk about that in this video as well. Now, for the next one, we have Mizuho. So they raised the target from $14 to $15 and keeps a neutral rating on the shares. Now, it says here that the company delivered better than expected Q3 results and provided solid Q4 guidance despite macro concerns, currency headwinds, and near-term disruption given its strategic repositioning. While encouraged by the results, the analyst believes the reorganization's focus on delivering profitability and the continued macro deterioration will pressure annual recurring revenue growth. So we're obviously going to have a look at the earnings report and try to understand what they mean by that. So if you're interested in that, sit back and relax, hit that thumbs up button, subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now. Or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. So first up, a little overview here. Total customer year over year has grown quite nicely. Quarter over quarter, I believe the last time we saw this number was approximately 10,500 or so. Then scaling large customers, which means large customer that will have an annual recurring revenue of exactly 100,000 or higher, continues to grow as well. C-suite priority continues to grow as well, quarter over quarter and year over year. Then they show us here from Q1 2021 to this quarter, they've grown 51% on a CAGR basis. This is for the annualized renewal rate. Quite nice. They're now over $1 billion for 2 quarters in a row. And but I believe that this will continue to be the case. So this quarter also they beat on earnings per share and they beat on revenue. So revenue came in at $263 million, 29% revenue growth rate excluding FX impact, 126% dollar-based net retention rate, 130% if you exclude FX impact and the Russian sanctions. Now it's a bit lower than last quarter. As you can see right here, it was 132 and approximately 135, but still quite nice. And overall, as you can see here, non-GAAP gross margin improved as well, 86% compared to last year, 85%. I believe Q2 was 84%, so an even better performance quarter over quarter as well. As you can see here, the expenses have increased year over year, quarter over quarter, they became a bit more stable. GAAP operating loss are becoming better. Now non-GAAP operating income is now positive, $18 million. They expect it to be a loss, so seeing here a positive number is extremely good. Let's see what 2023 could be. Could they go even closer to profitability on a GAAP basis? Let's wait and see, but this is already a move in the right direction. And obviously non-GAAP adjusted free cash flow, that's still negative and it's actually worse than last year. But as you can see here, for Q4, their guidance, non-GAAP operating income almost double from what it is today to $35 million. Revenue to come in between $277 and $279 million, which means the overall annualized renewal rate to come at $1.175 billion. And just a quick look here with regards to stock-based compensation expense. You can see here that year over year it has come down. You can see here that on a GAAP basis, so GAAP gross profit has increased year over year. GAAP gross margin has become better as well by 4% year over year. So there are some indicators that they are moving towards a more profitable company. Now, obviously, with the current state of the economy, the market, high inflation, high interest rates, etc., it might become more difficult to reach that goal maybe as fast as they expected, but currently they are moving in the right direction. Now, when we talk about the currency headwinds, I've talked about it in the past as well. Right now, the dollar is weakening. As you can see on the graph right here, this is on a weekly chart. Since it reached that high of $1.05, it has come down pretty fast. We're now at 94 cents. Obviously, let's say if we go back to those levels back in 2021, we will probably drop another 12%, but I don't know if that's going to happen or not. But currently, it's not a nice picture for the dollar. There's no support here. They're under the 200, the 20 and the 50-day moving average. So might continue to go down. The blue line here is basically because in the past this was a top a couple of times. Maybe it will serve as a support. Let's wait and see. But currently nothing really here screams bullishness when it comes to a stronger dollar, which is obviously a big positive for all the companies that have their businesses, that run businesses outside of the United States. We've seen that in the past 2 quarters. When the dollar was strong, obviously they took a hit. Now that the dollar is a bit weaker, we can go back to a more, let's say, neutral point when it comes to recognizing international revenue or FX revenue. Now, with regards to UiPath graph, you can see here that the MACD is a bit more positive. We can see here on the graph as well that currently we are sitting just above that 20-day moving average and just above that 51 as well. Let's see if it can hold. If it can, then maybe we might try to test that $15 mark as well. We can see it here twice. We have been rejected there. Now, for the 200-day moving average, there's still a long way to go. But currently, it does look nice. The week is not over. We're entering the end of the year, maybe lower volume, etc. So let's wait and see. But currently, the downside has basically a bit less of a risk unless we lose that 50-day moving average. But currently, we're sitting just above that. Let's see what happens in the next 2 trading days. And so to conclude, for those that own UiPath, you probably are happy to see the reported numbers. You are probably happy to see maybe a path towards a profitable UiPath. For those that are interested in the company, obviously this was also a nice quarter, much better than expected, especially in the current macro environment. So obviously do share your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.